Good morning friends, welcome to The Point. In today's video we will discuss a very short topic related to restructuring of loans. I think we all know as to what loans are all about, and it is given or extended by financial intermediaries, that is banks and non-banking financial companies. Now what is this restructuring of loans? So for an example, we'll take this HDFC bank and there is Mr. A. Now Mr. A has approached HDFC bank for loan and HDFC has passed loan of 10 crores to Mr. A. So after a certain point of time, Mr. A is not able to return the installment that comprises of principal and interest payment. So now bank has two options. Option A is that let Mr. A make a default and then HDFC can sue Mr. A for not returning the amount of loan. And option B is that HDFC can offer a facility of restructuring the loan, where HDFC would negotiate the terms with Mr. A as to the interest payment. So either they can change the interest payment, that is they could lower the rate of interest charged to Mr. A, or they can they can extend the period of repayment. For example, this 10 crore loan was to be repaid in the tenure of 5 years. Now what HDFC bank can do is extend this 5-year period to 7.5 year or say 8 period depending upon the circumstances. Now this arrangement between Mr. A and HDFC bank is known as restructuring of loan. So any change in the terms and conditions of loan in order to facilitate the repayment of it, which if not have been done would have led to the person making default on it or converting into NPA, is known as restructuring of loan. What is the objective of restructuring the loan? So first, it reduces the risk of default by the borrower. Next is it follows the principle of something better than nothing, where in case if the borrower goes bankrupt, the chances of recovering money is almost zero. So by restructuring the loan, some part of it can be recovered. Now what happens is, if the bank does not change or negotiate the terms with Mr. A, the entire money can be blocked or can turn into NPA. So in order to avoid such situation, the bank would change some or make certain negotiations with the debtor or Mr. A in this case, which would facilitate the repayment of loan. So earlier, where there was chance of zero money recovered from Mr. A, now with changing of terms, at least there is a hope that Mr. A will start repaying the loan and the installments on it. It is a win-win situation for the parties to the loan, as it becomes convenient for the borrower to pay and at the same time helps the lender to recover the money without fail. So it is a win-win situation for both debtor and the creditor, because now the terms are relaxed for the debtor, and for the creditor where there was a scope that the whole money will get blocked and will not be returned. Now there's a arrangement that made that the money would be repaid, but on the easier terms and conditions. So this is the objective of restructuring of loan. Then is resolution plan. Now resolution plan is nothing but an agreement or a document agreed upon by both the parties when the loan is restructured. So the new terms and conditions are set forth in the agreement, and the agreement is known as resolution plan. Now the new agreement mentions the parties to the loan, the rate of interest agreed upon, the period of repayment, and the amount of loan. It also mentions the process to be followed if the borrower, even after the restructuring, makes a default in the payment. So what course the bank will follow, whether they will sell the collateral that is being given by Mr. A to HDFC, or the HDFC bank will file a case against Mr. A. So this is also mentioned in the resolution plan. So last slide of the day says why was this introduced. So I have mentioned in many of my videos that in 2015-16 the amount of NPAs in our country was at its peak. Most of the public sector banks were suffering from the problem of NPAs, and in order to resolve this, debt restructuring thing was introduced by RBI, where the repayment could be facilitated on the easier terms and conditions. So in fact in 2020 also, the NPAs of public sector banks was somewhere around 6.8 trillion Indian rupees, and the previous year, that is 2019, it was around somewhere 7.5 trillion rupees. So RBI's objective is to reduce this number with the time frame. So to facilitate this, such schemes are introduced. Under debt restructuring, there are corporate debt restructuring, there is strategic debt restructuring. Now these two schemes I have discussed separately in the separate videos. For more clarity, you can refer to those videos which have been made by me only, and that also talks about the various other methods of debt restructuring. So friends, this was all about the loan restructuring that I wanted to discuss with you in the video. This is all for the today's video, my friends. Stay home and stay fit. Thank you so much for your patience listening.